All right, Gamestop down about 12% today and really disappointing many investors in the stock who were hoping that the AGM would be a catalyst for a big upward move. Now, that's a bit of a hopeful game. And as they often say in trading, hope belongs in the church in the bedroom, not in the stock market. And if we look at the chart of GME, you'll see that there are some problems. This is a pennant pattern. So I'm drawing this on a 30-minute chart going back 15 days. And you can see how the volatility is compressing here. The trend into the pennant was down. And when the trend into the pennant is down, you usually get a move to the downside. Now, we also know that when a market is moving in expectations toward some event, it's usually this buy on rumor, sell on news. In other words, the event rarely lives up to the hope or the expectations. And we can see that in the chart of GME. So how do you trade it? Where's it going to go from now? Let's try to figure that out. First of all, the answer to that question depends a lot on whether you're a long-term investor in the stock or a short-term trader. If you're a short-term trader, the stock is broken down and it looks more likely to go lower than higher in the near term because we've had this breakdown from the pennant. We are moving down towards this support line. The only saving grace is if I draw a trend line across these bottoms, we're sort of right at that trend line. All right, so some hope there. You can see how the market bounced off of it. However, that's our current support at just above $20. You've got falling tops on the chart, which is a sign of pessimism. Why is it a sign of pessimism? Because every time the buyers were winning the war and pushing price up, they couldn't push it up as high as they had the previous time. So if we think about trading and market action as a war between buyers and sellers, the buyers are losing the war. And that's how we know, or that's what we can say when we see falling tops on the chart. Okay, so we got falling tops, that's a sign of pessimism. We are moving towards a floor price, again at that $24 level, and then the next one at 20. If we break down through 24, we're probably headed to 20. Pretty certain that that will happen. The other issue is that we've already had this parabolic move to the upside. And when trends go parabolic, it's usually a sign that all of the buyers have come in, they're trapped, and it takes a while for that to cleanse. So I think in the short term, GME is probably going to head lower. Now, longer term, there's some catalysts there. The company has a lot of cash. They've raised a lot of money. They have, I think, over $4 billion in cash right now. And they have a CEO who has a history of success. He ramped up CHWY 500-600% a number of years ago. If we look at the chart of that stock, you can see, if we go back 5 years, you can see the big move that the stock had. He's out of that stock now, and it's been languishing, although started to perk up a little bit in the last few weeks. So that's what Ryan Cohen, the current CEO, has done in the past, and that's a positive. And then also, we have broken the long-term downward trend line if we're looking at the weekly chart. So in the long term, we've perked up. You can see a lot of volume coming in. Now, GME has very passionate shareholders. Some would say irrational shareholders, but they're very committed to the stock. And that will give the stock a good foundation. As I said, it's got quite a bit of cash, $4 billion. That gives them some money to work with. And it's got a general feeling of optimism among loyal investors. So longer term, I do think that this is a great stock to watch. Short term, it's just fallen short of expectations. And this is often the case when stocks move up on some hype, the news doesn't live up to it, and then it falls off. You hear people saying, oh, there's a short squeeze. That's the story from 3 years ago when there was a high short interest. The short interest isn't actually that high anymore. And then there was the argument, oh, well, Roaring Kitty has to exercise or is going to exercise his options, and that is going to bring in 12 million shares of buying. Well, he didn't exercise his options, he sold them. And even 12 million shares of buying on a stock that trades, 600 million shares some days is not really that big of a deal. The stock is so actively traded. That's why the company was able to raise $3 billion on these latest at-the-market financings that they did. So they've cashed up. They can thank Roaring Kitty for that. They've got a good CEO. That's good the long term. It's just the short-term picture is not all that great. When we look at that short-term chart, again, sellers are in control. We're pushing down towards 24. If we break 24, it's probably going to 20. And if you want to look out, even a little farther, it could start to get down. I don't think it'll get down to 10 because that's kind of their cash position. Probably $15 is good support. I think it probably stays above 20. And it just becomes a waiting game. How long is it going to take before the company does something exciting? My advice, get out of the stock, but watch it closely, because when something happening, when there's going to be something positive, you will see the market action show that. You will see a pickup in the volume. You will see abnormal price gain. That's all I have done for the last 30 years as a trader, is I look for that abnormality that tells me something is going on that has investors excited. That's what kicked off this stock early in May. Look at how the abnormal price action early in May with abnormal volume, that's what ramped it up to here. And then we had it again here, abnormal price action, abnormal volume, had a good run over the following 2 weeks. Right now, control has changed. The market has moved from optimism to pessimism in the short term, but the long term is still optimistic. So watch it in the long term, get ready to trade it again. But for now, I think move on to greener pastures. Hope you've enjoyed it, and trade well.